Thanks, Tiffany, and thanks to SCCCI for having us today. Very happy to be able to share with you a little bit more about online lending platforms, what we do, and how we can help SMEs in this time, especially with all this, all that's happening with COVID-19, and obviously a very big impact on our economy and all the SMEs. So we'll just jump right into it. 1 second. Okay, so Validus is an online lending platform. In fact, we are Singapore's largest SME financing platform. We are licensed by the MES. We've got a full capital market services license. We are also a approved financing partner on the GB's website. And we're also backed by very reputable VCs, including FMO and Vertex Ventures. Vertex Ventures is a member of Temasek Holdings. So you may have heard about it. So we're very lucky to be backed by very reputable VCs across Southeast Asia. So why do we exist? Now, online lending platforms across the world really exist for one reason, to address the SME financing gap across the world. So for us specifically, we are looking at supporting SMEs who are obviously the backbone of our economy in Singapore and Southeast Asia. So our vision is to become the active catalyst to help SMEs grow by promoting access to financing, and in turn, that will help SMEs grow and support local economies. So how do we do that? So as an online lending platform, we adopt the crowdfunding model. So for us, we are a peer-to-business lending marketplace where we connect SMEs who require financing to a group of accredited investors who will then provide these funds for the cash flow requirements that the SMEs have. Unlike other platforms in Singapore, we are probably one of the only platforms that work with accredited investors rather than a pool of retail investors. That just means that we work with institutional investors like financial institutions, family offices, as well as high net worth individuals, so that we have this group of people to fund these loans. The reason for that is really to help us keep our cost of funds low. So in that way, we're able to pass on the savings to our SMEs as well. So like I said, we exist to help address the SME financing gap. And that really means that we try and tackle the issues of delayed payment and lack of financing access. So these are the top challenges, as you can see from the screen, that a lot of SMEs face. And we try and tackle the top 2 challenges that are faced by SMEs currently. So as we all are quite aware, SMEs require financing on many different fronts, especially right now with COVID-19. Cash flow is king, and SMEs require, actually we are SME too, so we also require financing into our oil cash flow really to help pay for operational expenses and supplies. And it's across a range of reasons as well, including the opportunity to be able to capitalize on growth opportunities. So for example, like in the event where there is a growth opportunity, SMEs would be able to tap onto credit sources like us, like online lending platforms, to be able to get financing quickly, to be able to take on new projects or buy more inventory, for example, to be able to grow. So that's a few of the reasons why. Alternative financing sources like us, so online lending platforms, are really helpful in meeting short-term working capital needs. And the reason for that is because we're able to actually be able to do the financing to SMEs in a much shorter period because the application process is much shorter, for example, and much easier requirements to apply. So we complement the current suite of financing options available to businesses. And this is how we do that in terms of how we complement the existing suite of financing options. So compared to banks, however, for example, so traditional credit sources, banks would require a much longer application process. They've got very strict collateral requirements. They prefer to lend to businesses that has got assets that they can put up as collateral. Also, SMEs typically, or a lot of SMEs prefer shorter, smaller loan sizes, where it is primarily just to help to bridge a short-term cash flow requirement, for example. And also other sources besides the banks, for example, would be very expensive to go with. So online lending platforms like Validus are able to address all these constraints through a much quicker application process. Because we leverage technology and data to be able to make these lending assessments, we don't actually need to get a lot of the documentation that banks usually require. Also, because of our lower cost of funds, we're able to actually give SMEs a better rate as well compared to other sources of financing. Of course, we're not as cheap as a bank, and I'll get to it get to why in a bit later. But compared to other sources, we are still considered a very affordable way to finance. So online lending platforms in general are complementary to banks. We don't actually compete in the same space because we exist to address the SME financing gap for short-term financing. And typically, a lot of SMEs that utilize our services would require, for example, a top-up, on top of a loan that they already have from a bank, for example, to meet their cash flow requirements. Also, we offer flexibility in financing without collateral. So that gives SMEs a lot of flexibility in terms of when they just have to apply when they require financing. They don't have to be tied in for a longer period of time. Now, the lower operational costs and our risk model, because of what we are able to leverage from technology and data, enables us to keep the cost of funds low. So that really helps in ensuring that we keep it all very affordable. So in short, what we offer to SMEs is our financing options don't require any collateral, very flexible in terms of borrowing criteria. So for example, with invoice financing, SMEs don't have to come in and, have to finance a certain set of invoices. They could just finance the invoice that they require as and when they require that. Also, we do very small loan sizes, so anything from $5,000 to $500,000. And it is a much simpler process compared to your conventional loan application. So yeah. So we have a proven track record in Singapore. As I mentioned earlier, we are the largest SME financing platform. So to date, we've done over 400 million in loans disbursed. We were founded in 2015, and then we probably have done that amount, most of that amount in the last 2 years. So we've done over 15,000 loans. So for us, that experience also lends to us building our credibility as well. Our average turnaround time for a loan approval to remitting the funds to an SME's bank account is 48 hours. And we've seen that with SME financing, a lot of our SMEs actually experience a revenue growth. So year on year, last year we did a study and we saw that the average revenue growth was about 17%, which is quite a lot higher than the average in Singapore for all SMEs combined. We're also very proud to share that 90% of our SMEs are repeat borrowers on our platform. So they utilize us as and when they need it because it's a good option for them. So how do we do what we do? So when we talk about technology and data, I just wanted to share a little bit more and give you a bit of insight about on how we assess these SMEs to be able to lend to them. So we've got proprietary risk algorithms that assesses an SME's ability and willingness to pay. We also have got a very robust fraud and credit assessment process that determines interest rates and disbursement fees, as well as credit limits. So we use data sources. So unlike banks, for example, we use data sources that are not conventional. So instead of looking at financial statements, tax returns, that only give you a certain picture of an SME's performance to date, I suppose, we look at other trade data, something that would be more realistic or more timely as well. So we look at sales volume, for example, transaction history. We also look at customer reviews, for example, where it's available, as well as the relationships that SME has with others in the ecosystem to be able to make that lending decision. So our main strategy or model in availing financing to SMEs is by forming partnerships with a lot of corporates, as well as other B2B companies to be able to give us that data to make those lending decisions quicker and faster and better for SMEs when we look at availing financing to them. So some of our partners will include Foodpanda, for example, ST Engineering and Prudential. And with these businesses, a lot of the corporates that we partner with, comes under a program called corporate vendor financing that we've got. So corporate vendor financing allows us to work with a corporate to be able to avail pre-approved financing to their SME vendors. So for example, with ST, we are partnered with ST Engineering. We are able to then avail financing to their SME suppliers or vendors very quickly in a much shorter period of time, and also without lengthy documentation requirements for an application. So that makes it all a lot simpler and easier. And we're also able to extend a lower rate to these SMEs that are part of the program because of the partnership. So this partnership allows us to help SMEs unlock their capital to invest in their business. So we offer 3 products in general. Mainly, we do a lot of invoice financing. So we offer SMEs up to 90% of the invoice amount in terms of a loan, anything from 30 to 150 days payment term. And it starts from 0.8% a month. So if you compare that to banks, we're definitely a little bit more expensive, but that's because we, unlike a bank, we don't lend off our balance sheet. So we also don't base it on the same credit model. So it's slightly higher than banks. We always do tell our SMEs that where you can and where it makes sense, definitely go to the banks. We are a good option for businesses that require the short-term financing very quickly, or as a top-up, or as a continual top-up as well, if there is ongoing short-term cash flow needs, for example. So the other 2 products that we offer are purchase order financing, very similar to your invoice financing, as well as the unsecured business loan, which is called working capital financing. So we do up to 250,000 for working capital financing. And within the corporate vendor financing program, these SMEs would be able to access that would otherwise not be available to them in general. So how does this program benefit both SMEs and the corporates? So with SMEs, I mentioned definitely in terms of a fast pre-approved financing, and with a from 0.8% per month rate, that is not too far off from the banks. It's a little bit more expensive, but it's not too far off. It's still a very affordable option compared to other credit options as well. Also, there's obviously no collateral. It is an invoice financing product. Very flexible terms. So you you finance the invoice that you require as and when you require that, and it's also access to the other financing solutions that would otherwise not be available, as I mentioned. And also that allows a lot of SMEs that don't actually have a credit history to be able to build that credit to become bankable in future, so that they can go to the banks and obtain cheaper sources of funds. And for the corporate, so for example, like ST Engineering in this case, it allows them to build stronger relationships with their SME suppliers, and all in all, strengthen their supply chain as well. So invoice financing, I won't go into detail about how it works. Definitely happy to share if there are questions about it later. But in essence, this works very well for supply chain financing, or supply chains where SMEs are part of the supply chain, because they're able to advance payment on invoices, so they get the cash up front to be able to meet their working capital requirements. And also, because this is pre-approved, it's a lot easier and a lot quicker compared to any other options that are available for invoice financing. So to date, we have partnered with about 8 corporate partners, and they include SMRT, Sunray, ST Engineering, and quite a few more. So we have reached about over 20,000 SMEs that we are actively working with or are present for, so that these SMEs are able to easily access financing. It's a very simple 3-step process. We try and make it very simple for SMEs to apply. So typically we just ask for 3 documents. It's really for KYC. So for example, directors NRIC, proof of address, and an M&A. I'm sorry, memorandum of, memorandum and articles of association. And for each loan facility, so for example, for each loan through invoice financing, we will also require the invoice and supporting documents, of course. But in essence, the process is very simple. So it's just a 3-step process where you submit the documents, and then we will approve that within, we'll let you know of the approval outcome within 48 hours. And if it's all approved, if this is part of the CVF program, it's very quick. You sign the documents and we can disperse the funds in as little as 48 hours within from when we get the invoice verification. So here's a quick case study as well. So for example, a cleaning services company that was established in 2007, they required financing because the monthly contract value grew, and they needed the cash flow to be able to get more inventory and start other projects. Sorry, not inventory, equipment, and start other projects. And because the payment terms were 120 days, they didn't quite have 120 days to wait until they got payment before they started the other project. So they came to us and they applied for invoice financing, and they managed to receive 770,000 in funds upfront, and that allowed them to start on a new project. And ultimately, that actually led to an increase in annual revenue by about 20%. So here's just sharing. We also did a study last year that was really in terms of the economic impact of online learning platforms like Validus on SMEs in Singapore, and how that contributed to the SMEs as well as our economic growth. So in essence, we found that with online learning platforms like Validus, especially with us, because we did a study based on our data, we saw that the SMEs really benefited from having access to financing in the first place, and that actually drove their revenue growth, and in turn that supported job and employment growth, as well as their increased contribution to GDP. So we have shared this report in the media as well last year, and it's really to drive awareness for SME financing in general, because there is a gap here. So just a few testimonials from some of our SMEs in terms of how we've helped empower their businesses. And that's all I have to share today. Very happy to take questions, or if there's anything you'd like to find out more about online learning platforms in general, or just with Validus directly. Thank you.
Okay, thank you, XY. Okay, for the participants who have any questions that you have for XY, just click onto the Q&A button below to post some of the questions that you have. So maybe giving you all some time, to key in your questions, everything. Maybe I would just like to ask XY. Many of the SMEs will ask, if I'm a startup, or because of this COVID-19, suddenly my revenues is being impacted, or like I don't really have that much good P&L to show at the current moment. What kind of things does Validus support them, and what kind of maybe documents they must show to prove to Validus to be able to get the loans?
Yeah, sure. So for startups, however, we definitely encourage them to explore other financing options. And the reason for that is online learning platforms exist to bridge that financing gap. But the only way we can do that is through data and technology, or having access to data, so that we can make that lending decision. So for startups, unfortunately, in most cases, there isn't enough data for us to make that lending decision. And also, short-term financing is very specific to businesses that have cash flow requirements, a cash flow need, a short-term cash flow need, sorry. So with startups, I would assume that a lot of them would require capital to, for getting a product to the market, for example. And that really would be much better if startups actually seek equity financing, for example, or there's a lot of grants and schemes available. Currently, the government is very good at supporting startups in Singapore, and we typically encourage startups to utilize these options instead of utilizing online financing platforms.
Okay, I hope that answers some of the questions now. So, okay, offhand, I do have Karen, with us. She's asking more about invoice financing. Is there a
Yeah,
cap
yeah,
for the invoice financing, or is there a minimum amount that
yeah,
there?
sure. Yeah. So in terms of invoice financing, there is no minimum amount, but of course, I mean, whatever realistic amount is required. So we do see invoices as small as say $5,000, for example. So there is a cap amount for our platform, though. So for every invoice, it would be up to 500,000 that you can finance for. That said, is also limited by the credit limit that is extended to the business when they apply. So it's also based on the lending outcome.
Okay, so Karen, I hope XY has answered your questions. Just for those participants, which is not very sure how the Q&A works. If you'd like to know which are the live questions, just click on the Q&A button, and you'll be able to see what are the questions that we are addressing at the current moment. Okay, and next question I have, someone's asking is like, what's the biggest challenges as a crowdfunding company? I think more of like versus the normal banks versus now
Yeah.
fintech coming in. What's the difference, how things have moved already, and what is the changes or the differences that you guys face?
Yeah, absolutely. So I suppose as a crowdfunding company, first up, the biggest difference is that we can't lend off our balance sheet. So the funds that we're able to help facilitate for the SMEs come from a group of people. So we have to balance the requirements that we receive or the requests from SMEs that we receive for financing with the availability of funds on the platform. So I guess the biggest challenge as a crowdfunding company compared to a bank is that we are constantly having to balance that. Whereas a bank lends off their balance sheet, so however big their balance sheet is, they can just lend. So for us, that's unfortunately that's just a balancing act that we have to always be very mindful of. And on top of that, I guess as a crowdfunding business or a fintech business, our challenges are very similar to I think a lot of SMEs as well. It comes down to manpower. Finding good talent is always a challenge for a lot of businesses. And also for us, we are a fintech that is looking to grow as well. And in the last 2 years, we scaled up very quickly. So again, on that front, speaking to or getting, I suppose, growing our business is challenging, especially in this time of COVID-19. So we're currently facing a whole different set of challenges as we were before. Now it's about how can we better help SMEs, how can we better meet those financing requirements while we're also keeping our investors, I suppose, assured that on our platform that they can keep investing and trust that our platform will do the best for them as well as the SME. I hope that answers the question.
Yep, definitely. I think at the end of the day, be it what kind of industries you are whether in crowdfundings or whether you're a startup, we all have our own set of challenges that we have to face. And I believe even with this COVID-19, any industries, even like us, learning how to transform our company to make sure that it's more digitized, we can work from home. I think every day is like a learning curve for us, especially during this COVID-19. So, next question I do have, yes, XY would like to answer is on the invoicing financing. Someone's asking, do you require any financial statements and balance sheet on it?
Yeah, thanks for that. So no, we don't actually require financial statement and balance sheet. So if you're part of our CBF program, which basically just means that if you're currently working with a corporate like ST Engineering, SMRT, for example, then all we require is CBS. That's also a credit bureau statement. And in general, if you're not actually working with any of the corporates that we're partners with, that's okay. We still do accept obviously financing requests for that. And in that case, then we will ask for financial statement and bank statements depending, but not in every single case. So we try and keep it as simple as possible when it comes to documents that we require to approve an SME's application.
Okay, I guess being a fintech, you have to be quick, clean cut,
Yes.
get the things
Yeah,
done.
we definitely try and do that. Yeah.
Okay, so moving to next questions, I believe someone's asking on the fee structure. Maybe do you have any admin fee? Because previously I
Yeah.
was saying that there's certain fees going on and stuff. Maybe you can elaborate more on it.
Yeah, definitely. So for Validus, we keep it very simple. So compared to, banks and other options out there, we don't have like a whole list of fees. So for us, it's really a one-time fee. We call it a disbursement fee. So for us, it's almost like a transaction or admin fee. And typically that fee is a small percentage of the loan amount, very similar to how I suppose banks do it as well. It's a like a small percentage of the loan amount as an administration fee. So it's just a one-time fee, and that's it. So it's not like it's a ongoing monthly fee that we take based on how much you borrow. It's just a one-off flat fee.
Okay, so I believe if someone wants to extend, add on additional loans and stuff, is it another set of separate fee? Or
Yes, so we do loans in terms based on the invoices, for example. So every invoice finance can be grouped or can be counted as different invoices depending on what the SME wants to do. So for example, if they've got a one invoice this month and another invoice next month, then that is basically two fees because we're processing one invoice as one single facility. So you pay a fee on every single facility that you apply for.
Okay, I hope that helps to answer, the anonymous person who has asked this question. So moving on next, I think XY, you like to take on these questions. Does Validus provide any investments, crowdfunding? Yes,
Yeah.
over to you.
Yeah, so we're not an equity crowdfunding platform. There are quite a few equity crowdfunding platforms available, I believe. I'm sure I know of one or two in Singapore, but there's also quite a lot more in Southeast Asia. So in short, no, we don't. We focus very strongly and heavily on short-term financing to meet those cash flow needs. So in short, we don't.
Okay, cool. So okay, next up, I also have a question on I think it's
Dispersal fee.
fee. Yes,
Yeah.
is it calculated on the invoice value or amount advance, or how you guys calculate the whole questions?
Yeah. So the dispersal fee is a small percentage of the amount borrowed actually. So not quite, well, for example, if your invoice value is 100,000 and you don't need to borrow up to 90%, maybe you only want to borrow 80% of that. So then the dispersal fee is based on what you're borrowing.
Okay, cool.
Yeah.
I hope that that answers Law. Law, that's your question on it. Okay, next we do have another question that you also will be able to answer. What is the minimum eligibility criteria in terms of the interest rates, your interest rates and processing fees? I think
Yeah.
previously you already covered a bit on the admin fee,
Yeah.
but I think you can touch on more about the minimum
Interest
eligibility
rates
and
and
interest
the
rate. Yes.
sure. Yeah, thanks for that question. So in terms of minimum eligibility, so we are unable to fund startups. So our minimum eligibility criteria would mean that SMEs that come to us typically would have to have at least 2 years operational history. We also are unable to fund SMEs below below a certain size. So typically we also only look at SMEs that have got a annual revenue of more than 250,000. In terms of interest rates, they really vary. Obviously, they're all tailored based on the SME situation and circumstances. So in terms of interest rate for invoice financing, it starts from 0.8% a month. And for purchase order financing, that's a little bit higher. So that would come in at, or start from say 1.25 to 1.75% a month. And for working capital financing, which is your straight out unsecured business loan, that is probably about it can be as low as 1.75% onwards per month. So these are all monthly interest rates. And in terms of processing fees, so we only have the one-time disbursement fee, which is a small percentage of the amount borrowed.
Okay, I think another questions that SMEs will probably want to know, because you always say it's like from 0.8%, from 1 point something and stuff like. Of course, all the SMEs want the lowest interest rate as much as possible.
Yeah,
Maybe
that's right.
some of the things that maybe you can share with them that you guys look into to ensure that, hey, I give this company A 0.8, the other one is 1%. Like, what are the things that you guys look out for in terms of the interest rate?
Yeah, so because our model is so heavily based on forging corporate partnerships. So definitely any SME that is within the ecosystem of whom we have partnered with, the corporate that we have partnered with, would be able to access the lower tier of those rates. So we're saying like, 0.8% a month, for example. And SMEs that, for example, are applying for invoice financing off the back of a GBIS tender that they have been awarded, and that's for a government organization, then again, that also helps when it comes to help us in enabling us to offer a lower interest rate as well. But if it's a company that if we don't have any of those relationships and we don't have enough data to be able to make a good lending assessment, then either the interest rates will be much higher, or that we're just not going to be able to approve the application. So
okay, I hope that answers quite
it's
quite cute. The companies maybe asking.
I understand it is a bit vague. Unfortunately, when it comes to interest rates, it's very hard to give a straight up answer because we don't work off the model where it's a flat interest rate for everyone. So we're unable to do that. But if anyone's interested in finding out rates, we are able to turn around pretty quickly. So if you want to find out now, you can go to validus.sg and just just reach out to us, leave your contact number or email address, and one of our RMs will be able to get back to you really quickly.
Yeah, but I believe many of the participants, it's easier for Validus to give you a one-to-one, consultations, and it's free. Just pop by us and hey, what's the rates I can get the best rates, and there you go, your answer. Because different industries at different timing, and have different balance sheets. They will have to tailor it accordingly. So next question we have is that do you guys finance USD invoices?
Yep, good question. We actually get that a lot. So we are a Singapore platform, online lender. So at the moment, we are not able to finance any invoices that is not in Singapore dollars. So in short, we can't. So sorry, but in the future, that when we do, we'll be sure to share that.
Okay. So currently, definitely, slowly one day Validus will be going into USD and other currencies down there.
Yeah, one day we hope. Currently, we're also in 2 other countries in Southeast Asia. So we're present in Vietnam as well as Indonesia. So in those countries, we're also able to finance. We're able to finance only those countries' invoices. So those countries' SMEs invoices.
So if any of the SMEs have a branch office,
operations there, and they're billing in the local currency, so those invoices will be able to finance.
Okay, so I hope that answers some of the inquiries on. The next question, I understand that, XY, you're able to answer is on the invoicing financing. So Anonymous has asked this question because invoice financing is mainly tied up with government sectors or strong companies to ensure repayments back to Validus. What about purchase order? How can, their businesses benefit if they need to do a one-time purchase? Is the risk assessment for their company going to be similar to unsecured loan? Or, what's the difference on it?
Yeah, good question. Thanks for that. So definitely for purchase order, we do assess it a little bit differently, of course. And if the purchase order it is a one-time purchase, but it is still tied to the government sector or our corporate partner, then the risk assessment is slightly different to if we were going to do that based off like an unsecured loan. So if it's not for the government sector or not with any of our corporate partners, then yes, in short, the risk assessment is very similar to an unsecured loan. But at the same time, we obviously try and see if we have any access to any other data that we're able to make a better lending decision on as well. So anytime we have access to that, that helps as well.
So I believe that will also be part of the criteria to assess the amount of interest. For the purchase.
So to manage expectations as well, I suppose we say that we require data to make those lending decisions. Ideally, we'd be able to get those data really quickly, but in a lot of situations, we're not able, we don't have those data, and we also want to approve the SME or give the SME approval outcome in a very short time so they can, plan better. And, if they can't get financing here, maybe they will be able to make plans for other sources, for example. So we're always balancing being able to make a good lending decision within a short time, with obviously being able to lend at all. So when I say if we have any other forms of data to make a lending assessment, we have to actually be able to get that in a short time as well. So if we don't have access to that, we will then rely on financial statements and bank statements as the conventional method is.
Okay, I hope that
Yeah.
answers for the participants who have posed these questions. Next, I have Eric on the line with us. Okay, he's asking on what is the longest loan tenor and the approximate interest rate with this. I think the interest rate you have covered, it varies from different industries to industries, but maybe you can explain to him what's the longest loan that
Yeah.
they can go about. And I think another question is, I'll just like to add on, is that how is the repayment like? Because sometimes their repayment may be by interest rate for the next 1 year or 2 years, and you just had to pay interest rate, and finally you pay the final principal amount, or they had to pay by per quarter, yes, and per 3 months,
Yeah.
kind of situation. So probably as well you can take over.
Sure. So for invoice financing and purchase order financing, the repayment is right at the end. So basically, if your invoice financing is for a 3-month term, then it's just a bullet repayment at the end. So once we get payment from the end buyer directly, and then we'll take out the interest as well as the disbursement fee, and then the remaining we will send it back to you basically. So that's for invoice financing. And we offer, I mean, it's down to payment terms. So generally speaking, we offer 30 days to 150 days. There are instances where we are offering a little bit longer than that, and that's part of our recent initiative in view of COVID-19. We are extending payment terms to 180 days for our CVF program SMEs. So for other products like working capital financing, the tenor for that is 3 months to 12 months. So the longest is 12 months. And monthly repayment wise, that's basically a principal plus interest on the monthly repayment method.
Okay. Maybe since it's the COVID-19 period, different industries are also being affected. What if, the SMEs just nice is, being affected due to this COVID-19, and they probably have to, defer a bit more? What's the longest, period that you guys can go for the company before you like, hey, no, it's really up, the time's up, you cannot extend them? Yeah.
Yeah, well, there is no hard and fast rule around that. So we definitely, it's case by case basis, I have to say. But we work very closely with all our SMEs, and we always encourage our SMEs to let us know anytime that, as soon as they find that, they're unable to make payments for the next month, for example, or they don't think they'll be able to make full payment, or they need some more time. Like we always say that, like, let us know as early as possible, and together we'll work something out that will work for both parties. So there is no hard and fast rule. Yeah.
I think that the most important is to communicate, build a relationship.
Absolutely.
And Validus is always there to help the SMEs, in any difficult situation that they have at the end of the day. Okay, so next, I think we have another question from Karen. Karen is interested to find out more about invoice financing. Who can they contact with? XY, you are currently online. I think you're the best person, or,
I'm also online on the website.
Yes.
No, well, so absolutely. Anytime anybody wants to find out any more or want to receive more information, our website is the easiest, because on the website you can request for a callback or just leave a message and someone will give you a callback or an email back. So yeah, website's easiest, validus.sg. We are also on WhatsApp as well. You'll find the number on the slide here. So you can also easily just WhatsApp us too. So one of our RMs will come back to you quite quickly.
Okay. Like what we said previously, anything you can just email Validus, or if you're not too sure how it goes, even if you email Singapore Chinese Chamber, we'll also forward the inquiries that you have to Validus that site. Okay, next up, we do have Kai. Kai is asking on what's the difference between Mula Sense and Validus and maybe like funding societies. I think, you guys are being known as a fintech, and, funding societies as the peer-to-peer kind of lending format versus, Validus, which is slightly different. So maybe you can just, explain the differences of it.
Yeah, absolutely. So, well, key difference really is, I mean, we operate on a slightly different model. So even though the way that we provide financing to businesses, that we're all very similar in the sense that it's a crowdfunding model. So we connect businesses to a pool of people and a pool of funds to be able to do that. So that model wise is very similar. Now, how we're different comes down to obviously our business model, who we're backed by, for example, as well as our strengths in different areas like with technology and data as well. So first off, I guess the most striking difference would be our investor model. So instead of a big thousands of investors coming online, each investing in a loan facility and putting in maybe $10, for example, we work with a much smaller group of investors. So we work with accredited investors exclusively at the moment. And that means your financial institutions, your family offices, high net worth individuals, for example. And that enables us to keep the cost to serve quite a lot lower as well. And also be able to keep the cost of funds low. So that is a model that at the moment I find that it's just unique to us in Singapore. So that's a key difference. And then obviously who we're supported by as well is another area, another aspect that a lot of our SMEs and our investors also look at. So we're very lucky. We've been backed by some amazing and very reputable VCs that has given us very good strategic advice and support throughout our growth. So yeah, that's also another area of differentiation. And to date, in Singapore alone, we on a monthly basis, we definitely do the highest volume of disbursement to SMEs. So I guess in that sense, that's also another key difference. Yeah. Yeah. I hope that helps answer that question.
Definitely. It's like the model is kind of different. So,
Yeah.
I hope that answers Kia's your question on it.
Sorry,
Okay.
just to add, I suppose that also in terms of product, we're very heavily focused on invoice financing as well. I mean, that's not to say that we don't do any working capital financing, because we do, but compared to the other platforms, we're quite a lot more focused on invoice financing.
Yeah. Okay. So, and talking about working capital loan, the next question is definitely on it. So can a 1-year-old company apply for overseas business growth at the end of the day?
Yes. Yeah, definitely. A 1-year-old company to apply for funds to grow their business overseas, well, there's a lot of other avenues to tap into to be able to do that. Now, I personally, not on behalf of Validus, but personally, I wouldn't recommend utilizing short-term financing for that, because obviously, repayments have to be made quite quickly, unlike a long-term loan option from a bank. And also, obviously, the Singapore government is very good at supporting our SMEs. So there are quite a lot of schemes available. So I'm sure SCCCI would be able to advise on that as well, to help startups and businesses grow their business overseas.
Yeah, we do have a SME center by Singapore Chinese Chamber. So if any of you guys have like overseas business, inquiries on how to get some of the fundings or like what are some of the grants, you can approach to Singapore Chinese Chamber, the SME Center, to find more details about it. Our advisors will be able to assist you out. So I think moving forward, we still have quite a few questions. Another question is by AK Tan. He's asking, is it a single product invoice financing only? I believe XY, you have already touched about a few products, so maybe you can just revise.
Yeah, sure.
Products
can do. Yeah. So primarily we offer SMEs 3 products. Invoice financing is our main product. Working capital loan and purchase order financing. We most of the time we offer that to a current SME borrower on our platform. That's also not to say that we don't approve businesses that just come in and only require working capital. There's definitely instances of that. It's just that it's a much higher chance or rate of approval for businesses that are coming in to request for a working capital loan. So we do all 3. So in terms of, sorry, I saw AK Tan also ask if we can share some details.
On the
on
working
working
capital loan.
capital loans. So in short, I hope this is what you're asking, but in short, it is a unsecured business loan. So anything from a 3-month term to a 12-month term period. So for example, like, we actually only offer up to 250,000 for these loans. So for example, if a business comes in and applies for 100,000 loan for a 12-month period, then that's that's just based on monthly repayments. So principal and interest on the monthly repayment. Yeah.
Okay, I hope AK Tan that XY has answered your questions on the working capital loan. And talking about it, I believe there's one anonymous questions that is a typical SME. He's saying that he plans to go back to run his F&B family business, which he has been away for quite a few years. Will that affect his ability to get a loan? Because there'll be changes in the director for the company, and they have been around since 2002. So what are your thoughts to it? Yep.
Yep. I apologize upfront. I'm not completely across our credit team and the processes and the policies. So when it comes down to case-to-case basis like that, I would encourage that you reach out to us, or leave your email address, and I'll get the team to get back to you really quickly on that. Yeah, just off the top of my head, in this case, I don't have a straight answer for that, so sorry.
No worries. Okay, for those who left your details as anonymous, but your questions are not being answered, you can just drop the email to Singapore Chinese Chamber, and we'll also forward it to Validus at the end of the day. Okay, so next one I do have is on overseas, questions again. Okay, what about financing of Singapore companies' subsidiaries in overseas? Customers are overseas, for example, in the Philippines, subsidiaries pay Singapore in Singapore dollars. Yep, how do you go about, such issue?
So straight off the bat, though, for financing a Singapore company subsidiary, so the company that we're eventually financing would be that subsidiary, and because that subsidiary is not in Singapore, we're unable to do that. So in short, we can only finance Singapore companies. So even if that is your subsidiary and that's who we're financing, because it's still an overseas company, we're unable to do that.
Okay, I hope that's helped on Mr. Wee's questions. Okay, next up, we have Yin Hoon. Would like to find out more about the equipment financing, how it works in general.
Yep. So for us, we don't offer a straight, we don't offer equipment financing, unfortunately. So at the moment, we only do invoice financing as well as purchase order financing. So unlike a bank or some of the other financing institutions out there, we don't offer invoice financing for now.
Okay, so Yanun, I hope that.
Sorry, we don't offer equipment financing. Oh my God.
Okay, Yanun, I hope that answers your questions on your inquiries on equipment financing works. The other question we have from Joshua. Joshua would like to know that Validus model is largely different from the rest of the funding platforms. So can you comment on the non-performing loans percentage? I think many of the SMEs that I also face, they have this question: is that what's the rejection rate like? What's the percentage? Yeah, so that they at least have
of an idea. Correct. Yeah.
Yes.
Sure. Yeah, that's a very fair question. So for us, because our model is so heavily based on the partnership model, in terms of our SMEs, our reach to SMEs, our approval rate is pretty high because most of the financing requests comes from those channels, from our partners as well as from GBIS, for example. So the approval rate is, I say, anything between 70 to 85% at least. So it's still a very high approval rate. Now, in terms of non-performing loans, so we do publish our NPL rates on the website as mandated by the MAS. So last year, our NPL rate was 2.69%. And typically with online lending platforms, you'll find that there is definitely non-performing loans. So for any business or any company that tells you that their NPL is 0, I think you'll have to ask a few more questions there, because in the lending business, unfortunately, there is no such thing as a 0 NPL. So we do have instances where businesses just are unable to pay or have closed shop and can't make those repayments. So these instances occur more often than a lot of people think. And so compared to the rest of the market, our NPLs are reasonably low.
Okay, I hope, Joshua, that's answer your questions. And I think maybe we just grab the last questions before we end. It's also by Joshua. He's asking what exactly is the ERI for your invoice financing option, as you just touched on the interest component. How about the admin fee for the invoices?
Yeah, sure. So that one-time admin fee is the disbursement fee, as we call it on our platform. It really ranges, like I said, it's SME to SME. So I hate to not be able to give you a straight answer, but we're looking at from perhaps a 1% to a 2%. So it could be anything in that range, for example. And in a lot of cases, based on the SME borrowers on our platform, we are also, so for SMEs that have built, some sort of a credit history on our platform, we are also able to extend slightly lower rates to them. So it depends.
Okay, I think, we have really more or less answered most of the questions. For those participants, if you have more personal questions that you don't really like to ask here, not to worry, you can just, as we have said, just email, contact, give a call, to XY, Xiao Yun here, and then just ask her, directly what are maybe some of the burning questions that you have on interest rate and, on whether are you able to get the loans and more down here. So I think we have come to the end of the, for the webinar session. Thank you so much, Xiao Yu, for sharing with all the participants about the difference, of Validus versus the banks, the traditional way of, getting the loans, and how fast, what are the different kinds of supporting documents you guys are looking for. So I hope the participants have enjoyed today's session. As we have come to the end, like what we have said, for any questions, you guys can contact Validus or contact Singapore Chinese Chamber. We will also be emailing you guys the contact details, okay, of Validus, and do fill out this short survey if you want to receive the presentation deck today. Yeah, if you have seen on the slides itself, do help to fill out this short survey. We'll also be sending you this link to fill out the short survey so that Validus can send you the participation, the presentation slide. So thank you very much, Xiao Yun. Yep, you'll come to the end of the whole session. Thank you very much.
Thanks, guys. Thanks for having us.